Now we discussed that, income from capital gains is chargeable under that head only when there is a transfer of a capital asset, right? So let us see what is the meaning of a capital asset. And as I said, this is defined in section 2, subsection 14. It reads as under, capital asset means. Now there are two kinds of definition. I hope you know that differentiation between them, right? Property of any kind. So in order to be a capital asset, it has to be a property. Now property is a very wide meaning. Property does not necessarily mean the property as we understand in common parlance, which is your land and house and all those things. Property will include any and every kind of assets, right? And that is also kind of clarified when it says means property of any kind held by an assessee. So if you are an owner of a property can be your land, building, your plant, machinery, and all other things. Those property are construed to be a capital asset, except in cases which we will discuss now, which are the exceptions, whether or not connected with his business or profession. So let's say, for example, there is an assessee. Okay. He takes a 10-acre land, out of which 5 acres he used for the purpose of profits and gains of business and profession, and 5 acres he just keeps it as an investment. So if you see, this 5 acre is for the purpose of business and profession, while this is not. But it does not make a difference for capital gains purposes, in the sense that if he sells this land, which is related to the business, then also income will be charged under the head capital gains. And if he sells this one, then also, because this land is a capital asset for this person. He is not engaged in the purchase and sale of land. And as long as this is a capital asset, then whatever are the profits, they will be charged under the head profits and gains of business and profession. Right? Whether or not connected with his business or profession, but does not include the following. So if following are there, okay, if you come across a question, if you come across a situation in your life when there is any profits and gains which arise from transfer of any of these following asset, right, that will not be charged to tax under the head income from capital gains. That will be charged either under the head profits and gains of business and profession, or income from other sources, as the case may be. Now let us see what are the exclusion. Stock in trade. So whatever businesses you are engaged in, you always have stock, right? You have been understanding this from very basic accounting logic, right? Consumable stores. Consumable stores are spare parts and all those things, right? Which are again used as a tool in your business and profession, or raw material held for business. Now all these three things which I have spoken about here should be held for the business purposes, right? Second is agricultural land in rural area in India other than urban agricultural land. What does this mean? This means if there is an agricultural land in a rural area in India which you are owning, okay, let's say for example this person owns an agricultural land, okay, and he sells it. This agricultural land could be situated in rural area or in urban area. If it is situated in rural area, then the profits arising from this are not taxable under the head capital gains. While if it is in urban area, these are chargeable to tax under the head capital gains. So agricultural land in rural area in India other than urban agricultural land, right? So if it is an urban agricultural land, it is not covered here. Third is items of personal effects, right? Personal effect are something which have a personal connect to the person. So let's say for example, if you wear clothes, these are what? These are personal effect, right? It's a personal property, something which is very personally attached to you, right? That is movable property held for personal use. Now this word is important, movable property. So if there is an immovable property, let's say for example, you own a residential house, right? This residential house is as close a personal effect for you as anything else. Why? Because you live in it, right? But this residential house is an immovable property, right? What is excluded from taxation under the head capital gain is item of personal effect, that is movable property. If it is immovable property, then it is a capital asset. Held for personal use, excluding. Again, this word is important, excluding. What does this mean? This means if it is a personal effect, it is a movable property, then it is not a capital asset and hence it is not chargeable. But even if it is a personal effect, even if it is a movable property, if it is either jewellery, archaeological collection, drawing, painting, sculpture or any work of art, etc., then it is a capital asset. Let me just draw a small chart to explain this to you. So first thing is it a personal effect? There could be two things, yes, no, right? If it is a personal effect, then you see whether it is a movable property or not, or it is immovable property. If it is not a personal effect, obviously it is a capital asset and any profits arising from it is taxable under the head capital gain. If it is a personal effect, then whether it is a movable property or an immovable property. If it is an immovable property, again, it is a capital asset and chargeable under the head capital gains. But if it is a movable property, then not a capital gain. Except if this movable property is in the nature of jewellery, archaeological collection, drawing, painting, artwork, which we have discussed, then also it is taxable under the head capital gains because it is a capital asset. Right? You want me to explain this to you once again? So what we understood here was, you see whether an item is a personal effect. If it is a personal effect, if it is not a personal effect, then it is a capital asset and chargeable under the head capital gain. Right? But if it is a personal effect, again you see whether it is movable or immovable. Movable or immovable. If it is immovable, it is a capital asset, taxable. If it is movable, then it is not a capital asset and hence the gains are not chargeable under the head capital gain, except for these 5 categories. If these 5 are there, these in any case are considered as a capital asset and hence taxable under the head income from capital gains. Then you have special bearer bonds 1991, certain gold bonds which have already matured and hence there are no further issues for this, and gold deposit bonds issued under gold deposit scheme 1999. So these are also excluded from the definition of capital asset and hence any profits arising from their transfer is not chargeable as capital gains. Right? So the essence of a capital asset is, whenever you are given any question, you first see what is being sold. Is it a capital asset or not? If it is a capital asset, then it is taxable under this head. Otherwise, you go and see whether it is a PGBP or income from other sources.